The world isn't short on financial opportunities, and though the threat of another recession looms over us all, it's just as likely that we might soon hit a financial goldmine. In the face of this uncertainty, it's natural to be cautious and maybe even apprehensive of what lies ahead. After all, the threat of a recession can understandably create a sense of unease and may deter most people from taking big financial risks. However, history has shown that periods of economic challenges can also be accompanied by moments of unexpected growth and opportunity. Just as economies experience downturns, they can also witness remarkable upswings and breakthroughs. That said, it is essential to maintain a balanced perspective. While it's crucial to be mindful of risks and to plan for contingencies, it's equally important to remain positive. By staying proactive and aware of emerging trends and market dynamics, you can position yourself to seize advantageous financial opportunities when they arise. Ultimately, success often hinges on a combination of careful preparation, calculated risk-taking, and the ability to adapt swiftly to changing circumstances. While we cannot predict the future with absolute certainty, maintaining a positive outlook and a willingness to embrace change can help us navigate through challenging times and potentially lead us to financial success. Munger is a renowned financial expert, investor, author, and highly successful billionaire businessman. His expertise in personal finance has earned him widespread recognition, and he has authored several best-selling books on the subject. Munger's guidance has positively impacted the financial journeys of countless individuals worldwide, helping them achieve their wealth-building goals. For those aspiring to get rich over the long term, Munger's insights and advice can prove invaluable. If becoming a millionaire is one of your goals, taking the time to familiarize yourself with Munger's ideas and approaches could be well worth the time. With that, let's explore the 5 steps that can lead you to finally becoming a millionaire. Embracing these principles could truly transform your life forever. Step 1. Enhance your fortune. Munger's advice on achieving success revolves around the famous quote, "Fish where the fish are." During a Berkshire Hathaway meeting, he illustrated this concept by explaining that if a fisherman wants to catch a substantial amount of fish, they must position themselves in waters with a lot of fish. This wisdom conveys the importance of seeking opportunities in the right places to attain success. The key is to focus your efforts on areas where you're likely to succeed, rather than wasting time on less promising opportunities. This principle can be applied to everything, especially job hunting. Rather than applying to every job opening available, you can conduct research to identify companies that hire individuals with your qualifications, therefore targeting your job search more strategically. By fishing where the fish are, you increase your chances of finding a job that aligns with your skills and career aspirations. The same strategic approach applies when seeking business opportunities or marketing products and services. Identifying who your target audience is and their behavior can prove successful for you. By adopting a proactive and well-informed approach, you can significantly increase your chances of accomplishing your goals, putting luck in your favor. In essence, Munger's advice encourages you to make intentional business decisions. By fishing where the fish are, you position yourself for success by maximizing your efforts and resources in areas with the greatest potential profit. This mindset gives you the ability to make informed decisions, optimize their opportunities, and ultimately increase their chances of achieving their desired objectives. Step 3. Embrace the power of equity ownership. Munger emphasizes that owning equity is a great path towards wealth and financial security. Munger's own success story serves as a prime example, as he invested a vast majority of his multi-billion-dollar fortune in a single stock, Berkshire Hathaway. Over nearly 5 decades later, the value of his holdings in the company have skyrocketed to approximately $2 billion. It's important to note that Munger's wealth isn't primarily attributed to his salary as vice president of Berkshire, which is considerably lower than what many entry-level software engineers and investment bankers earn. Instead, his wealth is a result of the appreciation of the stock and his decision to invest them wisely. As a general rule, Munger advises job seekers to explore opportunities that offer equity ownership in the company. When individuals acquire more shares of stock, their stake in the company expands, entitling them to a greater share of the company's assets and earnings. This principle can be especially advantageous for workers in the IT sector, as they often receive substantial amounts of company stock as part of their compensation packages. Countless individuals have achieved millionaire status by capitalizing on the appreciation of their stock grants while working for rapidly expanding firms. The potential for long-term wealth accumulation through equity ownership makes it a compelling strategy for individuals seeking financial success. Step 4. Live within your means. A fundamental rule is to ensure that your expenses consistently remain below your income. This means managing your finances in a way that you spend less money than you earn, resulting in a surplus of income over expenses. Commonly known as living below your means or living within your budget, this approach holds the key to saving money, reducing debt, and establishing financial stability. The secret lies in maintaining this financial discipline over the long term, not just for a brief period. In addition to controlling your spending, there are various strategies to increase your income and facilitate this journey. One option is to negotiate for a higher salary or seek a raise in your current job by showcasing your skills and expertise to the company. Alternatively, exploring new job opportunities with better pay and benefits can increase your earning potential even further. Another way to boost your income is to start a side hustle or a small business, leveraging your skills and talents to generate additional revenue. Investing in your education and training can also open doors to higher-paying positions, expanding your opportunities for earning more. Learning a skill that is in demand and commands higher compensation, such as copywriting, web development, UI/UX design, and others, can be rewarding. By mastering such a skill, you can consider freelancing part-time or even transitioning into full-time work as you progress. This provides flexibility and the potential for significant income growth. Additionally, if you have spare rooms or property, you can explore the option of renting them out to generate extra income. Platforms like Airbnb offer opportunities for supplementary earnings through short-term rentals. Setting realistic financial goals and working passionately towards achieving them can lead to significant progress in increasing your income over time. Step 5. Embrace selective investing. Avoid over-diversification. Despite being renowned for his investment wisdom, Munger advocates against over-diversifying your investment portfolio. The key here is to resist spreading investments too thin by holding an excessive amount of different assets or products. Instead, Munger advises investors to focus on a carefully chosen group of high-quality investments and maintain a long-term approach. By sticking to this strategy, investors can steer clear of the drawbacks associated with over-diversification, such as higher transaction costs, increased complexity, and diminished returns. Munger firmly believes that excessive diversification can prove counterproductive, as it may dilute potential returns and undermine the necessary focus on sound opportunities. Munger's approach to investing highlights the importance of thoughtful selection of a handful of strong opportunities. By strategically allocating resources to a select few, investors can benefit from a deeper understanding of their investments, making it easier to monitor their performance and make informed decisions. This focused approach also reduces the complexity and cost associated with managing a large number of assets. Moreover, Munger's skepticism towards over-diversification stems from the potential dilution of returns. By spreading investments across too many assets, investors may find that the positive impact of a successful investment is overshadowed by the underperformance of other, less successful ones. In contrast, concentrating on high-quality investments enables investors to fully capitalize on the growth potential of those select assets. His advice is to concentrate investments on a few select opportunities while also incorporating a margin of safety in the portfolio. This approach offers the potential for higher returns over time. Rather than spreading their funds too thinly across numerous investments, investors could benefit more from focusing on a smaller number of high-quality opportunities and maintaining a patient, long-term perspective. By doing so, they can potentially achieve superior returns and reduce the impact of underperforming stocks in their portfolio. Munger also suggests that achieving extraordinary results doesn't always require doing extraordinary things. By integrating these 5 guiding principles, you have the potential to significantly enhance your wealth and make millions, or at the very least, accomplish your financial objectives. Click here to discover why Charlie Munger believes that earning your first $100,000 is more challenging than subsequent milestones, and to learn more about these principles and their potential to transform your financial journey.